What is the structure of mutual funds and how does this structure ensure the safety of your money when an AMC is changed? Industry expert Mr. Gururaj will elaborate on this now.
Level regulation is ensuring that your money is safe. When I say money is safe, again I am repeating, it is not the value of your investment. There is no fraud can happen. That is what I'm saying. Right? The value of your investment will depend upon market forces, right? Based on whichever scheme you have chosen. So the loss could be more or less, the gains and all that will happen because that is the structure of a equity or a debt. Right. So, but the fraudulent kind of thing, say, for example, you have seen, right, Imukori in roadside or any other plantation scheme or any, you have probably burnt your finger with some investment company where these guys have overnight shut the shop and taken the money and run away. Those things cannot happen in a mutual fund. That's, I want to make it very clear for the simple reason the structure itself takes care of it. Now, another important point here is what happens if the sponsor decides he doesn't want to be in the business? Right? You may ask that question. What happens if the AMC is changed? You may ask all these relevant questions. Now, there also regulation is taking care of it. How it is taking care of it? I'll show you as we go forward in the slides. Yeah. So the other benefit of coming to a mutual fund is mutual funds are registered as trust, right? Now, what is the advantage? Let me tell you. For example, if I go and buy a stock directly and sell it, the moment I sell it, I'll be paying either a short-term capital gain or long-term capital gain based on my time horizon, right? Now, the biggest advantage of mutual fund is mutual fund can buy and sell stocks. You will not pay any capital gains tax. This is the advantage of being registered as trust. This is a huge advantage, right? Otherwise, if you have done it individually, you would have been paying tax for it. Now, for the mutual fund, you will pay tax only when you withdraw money from the scheme. Yeah. So this is a huge advantage. That's where it is registered as trust. And luckily, the government has given that no your capital gains for the mutual fund as it is. Right. And as I mentioned, the trust is created by one or more sponsors. Right. And there are agreements which you have to follow. So today, as I said, trustees are the guys who take care of your money. That is their primary job. That's where we call them trustees, right? Because we need to have the trust. So that name is appropriately kept it as trustees. And I already told you the AMC handles it, how the custodian and what is the role of warranty agent. I've explained you all that, right? So this is what I was saying. Minimum you need to appoint 4 trustees, out of which 2/3 will be independent. Very important. So if at all my person I have to appoint, there will be only one person out of the 4 trusts. So remaining 3 are all independent. That's where you cannot interfere in their function. Yeah. This is very important. People are asking me this question, or you might have kept it in your mind. What happens if the AMC is changed, right? One is you have to take the prior approval of the trustees as well as the SEBI. Then the best part is as a investor, you will get 30 days time to decide whether you want to take your money back or shift that money to the new AMC or the mutual fund. Yeah. Like for example, a lot of things, Fidelity, it was taken over by somebody, HDFC took over somebody, right? All this has happened in the past. Now, if you ask me that basic question, what happened to my money? Nothing happened. You get 2 options. Either you don't want to move to the new mutual fund or the AMC, you are free to withdraw money. And there, no exit load will be applied. And you get a 30 days window. In that 30 days window, if you don't convey your option, automatically that money will be shifted to the new AMC, right? So that's where I said, somebody cannot sell and run away with the money. You cannot do that, right? So you have to give it. Maybe he is not, for example, Fidelity was not interested. So he sold it to somebody else. Similarly, IDFC and Stanchart took over. Right? All this will keep happening in the industry. Consolidation will happen. Somebody says, I'm not seeing much of a revenue here. I think I should move out. So you cannot move out like that. You cannot say, now I'll shut the shop and go. No. You have to hand it over to some other AMC. SEBI will see that all the processes are duly followed. The most important thing as an investor is you need not worry about it because whatever is the value that day, you will get that money. It is up to you whether you want to continue in that new AMC or you want to take back your money. So it is very, very important. Similarly, another important things, right? Say, for example, you might have invested in a balance fund. Let's say, I'm just giving an example. You might think that, boss, tomorrow if these guys change it as a debt fund, what will happen? I came with the purpose that I'll make some capital appraisals. Now, all of a sudden, they have changed it as a debt fund. Right? Now, there also SEBI is very clear. What it says is, because if we are going to change these important factors, right? Say, for example, what are the important factors for an investment? I came as a debt fund, you are making it as an equity, right? I thought money is available any day. Now you are coming and saying it is not available for 2 months or 3 months, right? Or probably you change that liquidity conditions, right? Now, all these are important factors which will affect the investor, correct? The basic thing what we'll say is, boss, I don't want to be in your fund because you have disappointed me or you have cheated me. You may think so many things, right? So SEBI has ensured that if you change any of these things, because you have to return the money to the investor. So that is the level of regulation SEBI has done to ensure that investor is no way affected by investing in a mutual fund, right? So regulation is very strong. I can vouch for it. The mutual fund regulation is the strongest among all the regulations. I can vouch for it. Because the guys who are managing the money, for them it is really difficult because so much regulations are there, right? But everything is accepted for the simple reason because it is in the interest of investor. That's all. No arguments. It is in the SEBI, whatever has done is in the interest of investor. Any mutual fund also should work for the interest of investor. So no questions asked. We have to follow the regulation.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.